Hi everyone, welcome back to Biri's podcast. This is a Q&A session and a person has asked about Natco Pharma. I think this is one of the most knowledgeable questions which a person has asked in the comment section. So let's see what is the question. When Natco was falling last year, it went down to 550 rupees. But the PE then was 25 times. And now when the price is around 1100, the PE is 13 to 14 times. If you look at in terms of valuation, would you consider it cheap now or was it cheap back then? How do we look at valuations when there is such a price difference in price and earnings?
That's a good question to ask.
Yeah.
So, what do you think, Arun? What should you do?
We should look at profit and loss.
No worries, I'll help you out. Okay. The way you look at it is, forget Natco. You take any company. Let's say you take Trent or you take Titan. It's a good company. It's been there for a long time. Price has been going up and down. P has also been going up and down. It will be a great company to own at any time. The problem is, when should you buy it? Let's say you don't have any of these companies, including Natco. When do you buy it? That is when you look at the PE. Right? So, if you looked at the PE back then, though it was 500 rupees, the PE was 25.
Yeah.
It would have looked unreasonable. What's happened is the numerator denominator keeps changing, right, in the division. In the case of Natco, the earnings number started ballooning. As the earnings number started ballooning, the price was slow to catch up, and it's still slow to catch up. If we keep PE at 25, where should the price be now? Do you know maths?
Yeah.
So do the math. Tell me. Use a calculator. If we take PE instead of 14, let's say PE today if Natco is 25, what should the price be? Price, earnings. So now the price is 14. 14 is a PE. Price, is 1100. So what is the earnings?
1000 divided by 14.
Correct. 1100 divided by 14 is what?
78 times.
Earnings is 78, not 78 times.
Okay.
So the equation is price divided by earnings equals PE. So now the PE is 14. Price is 1100. So what would be the E? EPS is what?
78.
78. Now you know it's 78. So now let's say instead of 14, let's increase that to 25 to match what it was, 525, right?
Yeah.
Correct? So if I make PE 25, what should the price be if I keep PE? If I hypothetically say PE is 25, where will the price have to be if EPS is 78?
25 into 78.
Which is what?
1950 rupees.
Yeah. Is it 1950?
No.
That's what Anand says. That's what Anand says.
Undervalued.
That's why Anand calls it undervalued. See, if you see, usually it's trading at 20, 25 is what the range is at.
Okay.
Natco's at, right? So it's trading well below that. That means there is a potential for the price to catch up. Sometimes price catches up slowly to earnings. Sometimes the earnings catches up slowly.
Okay.
So here we have an opportunity to enter this company because the price is yet to catch up. The market is yet to see that it's selling cheap. This can happen not only with Natco, it can happen with Titan also. For example, what is Titan trading at right now? Right, 3,430. That is the price. PE is 86.
It's high value.
It's at high value. So now to say, let's say the price earnings suddenly shoots up in Titan, right, and the PE drops to 40. The price has not caught up. Then there's an opportunity.
So
because the company declares the earnings, right? Sometimes the market puts the earnings already, right? It discounts it. It's called discounted earnings. So it says, I'm sure it will earn. Next year the earnings will go up by X%. It happens in the Nvidia stock. So it's going to go up for sure by 10%, 20% earnings. So the price is already pushed up. Right? So there's no room for correction. Sometimes the market gets caught unaware. Where they think the earnings will grow up only by 5%, 6%. But the company declares the earnings have gone up by, let's say, 30%. The price, if you suddenly see the PE ratio, it will collapse. The price won't have moved. Stock price hasn't moved. But the earnings has moved. So the market will suddenly wake up and catch up and start moving the price up. So there's an opportunity to buy. So you have to always see this. So this kind of paying attention to it is important. This is why I say, you cannot do this as a hobby. You have to do this as
habit.
habit. Yeah, you have to be full time invested into this to track these companies, and that's why I say don't have too many companies. Imagine trying to track companies like this if you have 30, 40 companies in your portfolio. It will be impossible.
Last week,
You will have
crash
no,
happened like last week.
correct. You will have no friends. You will have no life. You will have no job because whole time you'll be reading, trying to catch news.
Yeah.
That's why I say keep it 4 to 5, keep it simple, and it is very boring. A lot of you complain saying, "What is this? Same content over and over again. What is this? Same thing over and over again. Talk something new."
Yeah.
We're not a cinema here. This is not an entertainment channel. This is an investment channel. It will be boring.
Yes.
Yes. And if it is boring, then be rest assured we're doing it right.
Okay.
If it is very interesting and it looks very flamboyant, then we're doing something wrong and please don't watch. Anyway, I hope that answers.
And usually Anand sir says that pharma stocks are good because they are exporting outside the India. So how does pharma companies earn more by exporting?
Because what happens is now the RBI is holding interest rate. Let's say the government, there are some ministers who are demanding the RBI cuts interest rate. Let's say he cuts interest rate. The rupee is already weak. The dollar is not cutting interest rate there.
Okay.
The dollar is very strong. That means the rupee will slide, will degrade even further. That means for every strip of medicine he's exporting, he's earning more in terms of rupees. The dollar earning is the same.
Okay.
The same $1 only is earning per tablet. But now, since the rupee has gone from 83 to let's say 84, 85, his earnings has gone up by that percentage.
Yeah. Okay.
For doing nothing. So this is why we say these companies, pharma companies, IT companies, when they're exporting and they're earning in dollars, it is good for them if the rupee starts becoming weak or if the dollar becomes strong, because their earnings goes up. Without doing anything, they're getting more money. This is also true for the Japanese company. The yen becoming weaker, there are a lot of Japanese companies, they're global companies, and they spread all over the world, and their money comes from all over the world. So when the money comes back to Japan and is converted to yen from dollars, they're getting more yen. So the companies are becoming richer and richer.
Okay.
Because they're spending all in local currency, which is yen.
Yeah.
Understood?
Yes, sir.
Sure.
So I hope that this video is informative and interesting and you had some knowledge about Natco Pharma, its valuation and whether is it cheap last year or this year. So if you like this video, please share it with your friends and subscribe to this channel for more videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.